In this video, I'm breaking down the best trendline trading strategy, clean, simple, and ridiculously effective. I'll show you how to draw them like a sniper, catch precise entries, and avoid the fake-outs that wipe most traders out. So if you're tired of guessing and want a strategy that actually respects price action, stay locked in. This could be the game changer you've been waiting for. Let's dive in. All right, let's break it down real quick. What exactly is a trend line? A trend line is simply a diagonal line we draw on our charts to connect either higher lows in an uptrend or lower highs in a downtrend. Think of it like the roadmap of price. It shows us the general direction the market is moving in. In an uptrend, price is going up, but not in a straight line, right? It moves in waves. So we connect those little dips, the higher lows, to form our trend line. In a downtrend, we do the opposite. We connect the lower highs to guide us through the bearish movement. It's like drawing the support or resistance line, but at an angle. And when used right, it can literally tell you when to enter, when to wait, and when to get the heck out. All right, now that we know how to spot an uptrend and a downtrend, let's bring it to life with a real chart example. Take a look at this one right here. What do we see? Yep, a clear downtrend, right? Price is making lower highs and lower lows. Let's connect those lower highs with a trend line to guide us through the bearish movement. And check this out. Every time price taps that trend line, boom, it respects the line and reverses back to the downside. That's the power of a properly drawn trend line. Now let's go a little deeper. Right here at the top, we get an impulse move to the downside, strong bearish push. Then comes a correction, a little pullback, followed by another impulse, then correction. Impulse, correction. Impulse, correction. You get the pattern, right? It's like the market is breathing, in and out, but always respecting that trend line. Until finally, boom, price breaks out of the downward structure and starts pushing to the upside. That's a potential shift in market direction, and we're going to talk about how to spot and trade that breakout like a pro in just a moment. All right, now let's zoom in a little and break this structure down properly. Check out this point right here. This is our swing high. Then we've got another swing high at the top of that corrective move. Clean, right? And if you look closely, we've got a few more swing highs lining up just below. Now let's switch things up and take it from the bottom. At the base of that impulsive move, before the correction kicks in, we've got a swing low. Then another one after the next correction, and another one after that. So what do? Boom, we draw another trend line connecting these swing lows at the bottom. And what we're left with is the true definition of a beautiful market structure. Price respecting both the upper trend line formed by swing highs and the lower trend line formed by swing lows. This structure gives us everything: direction, key zones, and clean opportunities to execute trades with confidence. All right, now let's flip the script and take a look at an uptrend. Just like before, we've got our swing highs forming at the top of each push, and our swing lows down at the bottom of each pullback. Remember, in an uptrend, price is making higher highs and higher lows, classic bullish structure. So what do? We draw a trend line connecting the swing highs, and another one at the bottom to connect the swing lows. Now here's a super important point, and I want you to lock this in. Price won't always move perfectly smooth during a trending market. Yeah, I know these clean textbook moves look nice, but real charts can get messy. Sometimes the pullbacks go deeper, sometimes price fakes out, and sometimes it just disrespects everything like it's had a bad day. But the structure? The structure never lies. It still gives us a roadmap. So don't expect perfection. Expect patterns. That's what we trade. So now the real question is, why do we even draw trend lines? What's the purpose? Is it just to make our charts look fancy? Nah, it's deeper than that. Trend lines can actually act as support or resistance. That's why they're so powerful. Let me show you what I mean. Look up here at the top. Price touched the trend line 3 times, and on 2 of those touches, right here and here, it respected the trend line as resistance, pushing price back down each time. Now let's shift our focus to the bottom. Price started down here, and when it came back to retest the lower trend line, boom, it acted as support, sending price right back up. So in short, trend lines aren't just lines, they're zones where the market reacts. And once you learn how to spot those reactions, that's when the magic happens. So here's another major reason why we draw trend lines, and this one's a game changer. Breaking a trend line can signal a possible trend change. Let's take this chart as an example. We're clearly in a downtrend, right? Lower highs, lower lows, the whole bearish vibe. But watch this, right here, boom, this is where the break happens. Price breaks above the trend line that was previously holding it down. And what does that tell us? That the sellers are losing strength, and the buyers might be stepping in. So now, after this break, the market shifts from a downtrend to an uptrend, or at the very least, we start seeing bullish movement. This is where smart traders start looking for buying opportunities. Because when a trend line breaks, it's not just a breakout, it's a potential change in direction. And that's where the money moves start. All right, let's address one of the most common questions when it comes to trend lines. Do we draw trend lines from candle bodies or wicks? And the answer is simple. Draw your trend line where you can get the most touches. Wicks or bodies, it really doesn't matter. Let me show you what I mean. Starting right over here, you'll notice the trend line is touching the body of the candle, but we've got wicks poking through the line. Then down here, it's the opposite. The line touches only the wick, not the body. Now take a look at this spot. We've got no touch at all. And guess what? That's still perfectly fine. Then over here, the line touches just the body, with no wicks sticking out above the line. So what's the point? It's not about being perfect, it's about finding structure. If your line gets a good number of touches and price is respecting it, you're golden. Don't stress about being exact. Trend lines are a guide, not a laser beam. All right, now let's get into the part everyone's waiting for. How do we actually trade trend lines successfully? There are two main ways to do it. Number 1, trend continuation. Number 2, trend reversal. Let's start with the first one. Trend continuation, trading with trend lines. So we've still got our downtrending market, right? And since we're in a downtrend, we only want to look for selling opportunities to stay in line with the trend. Smart trading, not hero trading. Now check this out. We've got a support zone here, and notice how price rejected this area multiple times. Eventually, price broke below that support zone. And here's the key. When support breaks, it often flips into resistance. And look at what happens. Price comes back up, fails to break above, and continues dropping. Now, let's say price pushed just a little higher and tapped into our trend line. That would have been a perfect entry for a sell trade. But since price didn't reach our trend line, no trade. We stay patient. We don't force it. Then boom, we spot another support zone forming lower. This time, price respects our trend line, touches it beautifully, and drops again. Clean sell. And guess what? It happens again, new support, price retraces, taps our trend line, and continues the bearish move. This is trend continuation in action. We wait for price to pull back to structure and to our trend line. Then we take low-risk, high-reward trades in the direction of the trend. Now let's dive into strategy number 2, trend reversal trading. We're still on the same chart, just looking at it from a different angle now. Let's start by marking this support zone right here. Notice something important? This is the exact spot where price broke above our trend line. Now you might be asking, how would we know it's going to break above? Well, the clue is right here. Price formed a double bottom, which is a classic sign that the market is struggling to push lower. That double bottom is our first clue that a reversal could be coming. Then, boom, price breaks above the trend line. At this point, you've got two options. Number 1, if you're an aggressive trader, you can enter a buy immediately after the break. Quick entry, but a bit more risky. Number 2, let's extend this previous resistance zone forward. What do we see? Yep, that same level is now acting as support. So you wait for price to come back, retest that zone, and then take your buy. Cleaner setup, lower risk. And as you can see, price took off beautifully to the upside after that. That's how you catch high probability reversals using just structure and trend lines. And there you have it. The best trendline trading strategy explained step by step. Now you know how to identify the trend, how to draw your trend lines correctly, how to trade both continuations and reversals, and most importantly, how to stay patient and wait for high probability setups. Trendlines aren't some magic tool, but when used properly, they can give you powerful entries with minimal risk. If you learned something new or if this helped you understand trendlines better, make sure to like the video, leave a comment with any questions or thoughts, and subscribe to the channel for more clear, practical trading content. Until next time, trade smart, stay patient, and let the market come to you.